Good morning, Steve Freed in Chicago with the morning grain comments, and we've got a mixed trade. Beans are down about 26 cents, soybean oil 62 points, and meal $3. Corn's about unchanged, while wheat's up anywhere from 2 to 12 cents. Outside markets, looks like stock's going to be higher, dollars higher, crude's lower, gold, silver, copper, coffee, sugar lower, while cocoa and cotton are higher. I think three news over the weekend. Number one, there was good rains across parts of the Dakotas, Minnesota, Iowa, Illinois, Indiana, and those rains will probably solidify the soybean yield higher than maybe what some people were trading before the rains. The outlook for the 10 days is showers mostly in the eastern Midwest, but temperatures closer to normal. So no heat and no extreme dryness of concern. We're still looking at lower Canada crops because of rains there might be too late. The parts of Europe remain wet. I'm sure that they would like to see better harvest weather. Eastern Ukraine, parts of southern Russia is dry. South America is kind of off the radar right now, but it's still dry in Argentina with mostly favorable weather starting in Brazil. There were recently heavy rains in northern China may have reduced some of the crops there. China continues to be an active buyer of Brazil, Argentina, and U.S. beans. We noted that Russia and Australia came to agreement on reduced tariffs into Russia for barley out of Australia. The other news was Black Sea continues to be more tension. The Ukraine's bombed two key bridges that provide Russian services to troops in Ukraine. Ukraine also bombed an oil tanker of Russia. So we're concerned, as a market should be, that Russia may retaliate by bombing grain vessels. So the tension there is still pretty high and offering some support to the wheat market. The funds liquidated out of some contracts last week, reducing their net long positions in the grain room. Right now, we're trying to hold $13.50 in set beans, $13 in no beans. The corn market, trying to hold this 480 area. Next resistance probably would be $5. And wheat also holding the 640 area, but with export demand out of the U.S. Slow, some of this is probably offsetting some of the higher energy prices last week and things of that nature. So wheat might be more of a sideways trading market with poor demand for U.S. negative, but lower global production and Black Sea tension positive. So we'll just kind of see how the market wants to prepare itself for this week's USDA report. They may not drop the new crop soybean carryout as much as people had hoped and keep the corn carryout elevated.